230s, the curve bull flattened yesterday. The price signal there, a suggestion that maybe this is a market that's still pricing in some upside risk from DC at the long end of the curve.
So I think that's right. I think, John, I think that is true. I also think there was a couple of big buyers in the market yesterday that drove the back end of the curve. So I think some of it was maybe a reaction to that. Listen, I also think if we don't have any tangible news in the markets, and we've talked about on this show before, we're going through what is the most extraordinary demographic demand for income. If there's a catalyzing event, which we will get, that will push rates moderately higher, we think, in the fourth quarter. If you don't get it, the money just comes in. Where do I get yield? If I'm sitting in Japan or if I'm sitting in Europe, back end of the Treasury curve still gets you yield relative to the rest of the market, so you get that pull that just, it is amazing. It's like a ticking clock. Without a catalyzing event, it just keeps moving.
We're going to get to that in detail in just a moment. Katie, the way you think about the equity market at the start of the year, I was told by a lot of people, three pillars: the earnings story we've talked about, the synchronized growth story we've talked about, the third pillar being DC and all the good stuff that we may or may not get. Looks like we may not get it now. As an equity investor, how do you think about DC and how do you fold it into your strategy?
Yeah, I mean, there was a lot of optimism, clearly, coming into the beginning of the year that we were going to see some of this deregulation, I should say, take place. So we had certainly, like, the small cap part of the market, for example, had rallied a lot ahead of that. Now I would say we're actually on the opposite side of the spectrum, where people think nothing's going to happen. So I would argue to you that in the small cap space, as well as in other sectors of the market that are going to be beneficiaries of deregulation, they might be mispriced. There might be oversold, if you will. So we think that actually those are areas of the market to look for value in what is otherwise a very extended valuation for the aggregate market.